Hi everyone, welcome back to Stephan Livera podcast, a show brought to you by Swan Bitcoin, the best place to buy Bitcoin. Joining me today is Walt Smith. He is a venture investor over at cyber.fund. Now, Walt, you wrote an interesting post on MEV, and it's been, I guess, part of the discussion around Bitcoin and what direction should Bitcoin go. First of all, welcome to the show.
Thanks for having me. I'm super looking forward to getting into it. Been a fan for a while.
Oh, great. Thank you. Let's just start with, why you wrote the article.
Yeah, I think, kind of the impetus was a lot of tweets from some interesting people in kind of the Bitcoin space who have some overlap with other ecosystems. I think, the heart and center of crypto has always been Bitcoin. And I don't think that's ever changed, but I think there's kind of been some technology developments outside of the ecosystem and along with that, some research. And there was just a few prominent Bitcoiners who would tweet about MEV or miner extractable value quite a bit. And, it's something I always wanted to dive into. So I basically just used it as an excuse to kind of research something I was curious about. And it's strongly related to kind of the hash rate market as well, and the size of pools and kind of mining generally. So, I have family who works in mining, so kind of always have just picked up on that on the sideline. And basically just kind of used it because I was curious. And then, no one had covered it in depth. I think there's been pretty good discussion since writing it. Some of my views from the piece have changed slightly, but I think the overall thesis kind of remains intact so far. But happy to get into specifics or anywhere you want to take it.
Great. And so I think what has also happened is maybe there's been some movement in terms of how we define this, how we talk about this, right? Because for years, people have just used the term MEV, just that term. Then I think in the Bitcoin world, there are people who have, as an example, Matt Corallo, longtime Bitcoin developer, now more probably focused in the Lightning world, but he's using the term MEVil, right? To kind of specify kind of the bad form of that. And another developer, Reardon Code, Brandon, aka Reardon Code, has talked about the term centralizing MEV. I think that's the term he uses. So there's kind of a few different words and things to try to disentangle. So from your perspective, how do you define MEV? Can you just start with that? If you could start with a definition.
Yeah, I think, if you go back to the literature, it's basically just the ability of a miner to insert, reorder, or kind of tinker with transactions otherwise. So maybe they're just delaying their propagation to other miners or something. But generally, it's just the extra value you get from being able to express some optionality over a block. So if you're the one building a block, whether that's, block templating through a centralized mining pool or through vanilla, at home mining, if you're doing that, probably not doing that without a mining pool, but it's kind of the ability to just kind of reorder and tinker with the block and then extract value. So you could insert transactions, you could snipe an ordinals mint, or you could just delay someone's transaction. And I think, the MEVil and kind of the centralizing MEV is probably directionally super correct. I think, there's instances where MEV can actually break up kind of cartels or cabals. But there's other instances where it actually kind of leads to just a few sophisticated players building all the blocks or kind of directing the chain, and at least in other ecosystems. So I think, Matt, I don't think the term's very good. I think it's just too many letters, but I think the direction is generally correct for sure. I think actually Bitcoin in some ways will kind of benefit from MEV, which I think gets back to Brandon's point of centralization, because, generally, most of the mining pools don't really offer that much expressivity to the people using them. They don't really harvest that much MEV. And then, as Coinbase issuance kind of goes down over the next, 10 years, which is one of the best things about Bitcoin, but, other fees or non-standard UTXOs kind of become a big part of the revenue for miners. They actually have to get more advantageous now they're building the blocks. So I think that can lead to some of the hash rate pools breaking up or just kind of getting less hash rate in total. But yeah, I think you can kind of break this down in a bunch of ways, and you can look at the application side or kind of the routing side or the miner side or even the user interface side, right? If you have too much expressivity in the user interface, maybe the user signs a transaction that allows kind of this value to be extracted more than otherwise would be. And at all these levels, there's going to be MEV, and some of it's centralizing, some of it's not. But some of it can also just cause kind of instability, right? Like maybe you have to wait, 2 more blocks to get confirmation on the Bitcoin chain. So I think we could kind of go into a specific examples, but I think the commentary and kind of the pushback on my piece was initially from Matt, with his, I don't know if you pronounce it MEV or something else, but I thought it was pretty thoughtful commentary, but then it kind of gets down to like the semantics of each example.
Okay, yeah. So a few things. So I guess to distinguish between because if the term is really, really broad, then it's kind of just like even standard operations that everybody kind of has no issue with. Let's say just doing RBF, like replace by fee, like that. Is that MEV? Is that a form of MEV that's an issue? I think most people would say, no, that's not an issue. That's just standard, Bitcoin network behavior since RBF has been a thing. But maybe there are other forms of MEV, and I think you go through in your piece and you catalog some of these different ones. I think at the first one you have RBF there, then you have others like, sniping an ordinal mint or front running an ordinal mint, or minor cartelization. So I guess maybe if you could go through and spell out some of the different forms of MEV, and then we can sort of go from there.
Yeah. So I think, replace by fee is a really interesting one because I don't think it's so much the activity itself. I think it's more so that, changing how your client orders transactions based off of fees or based off of net new fees that enter in later, is a change from the rest of Bitcoin Core. And that has, been broadly adopted, from the smart people I talk to have told me like somewhere around 30% of miners are doing RBF, or full RBF. That was in, like February. So I'm sure it's probably much higher now. But I think with RBF, right, if you're changing how your client works, which has kind of happened in other ecosystems, then you can do more interesting strategies. So I think you're right. The categorization of the term is really broad. So kind of to get into some more of the specifics, I think RBF is like a great starting point, but then it kind of launches into these other ones where it's like, okay, for years, Bitcoin has kind of operated in this like technology box with very low expressivity. You had like discrete log contracts, you had like Lightning, you had maybe some sort of other like payments channel, but there wasn't a lot of like expressivity. But the second you add expressivity, that gives the optionality that's natively embedded into the protocol that allows a miner to pick between doing full RBF or no RBF, right? That becomes an issue. And I think, the point of the piece and kind of what I think Matt is also pushing on and Brandon is we're going to have a lot more expressivity, whether Bitcoiners like it or not. Just the chain itself is such a good platform for censorship resistance. And if you can just get a little bit of code that, has some use case outside of just payments, people are going to use it. And then the censorship resistance element of Bitcoin means, even if you hate this, even if you have your own mining pool that censors, some types of transactions, it doesn't matter, right? Because people are still going to use the chain how they want to use the chain, which is a great thing. And then, the optionality is still embedded in the back end. So I think, the biggest thing I wanted to do with the piece, besides, learn for myself and kind of share that with the broader space, was kind of push on this, we're getting this expressivity, we're getting this, and we already have this minor optionality. And for years, Bitcoin's been allowed to kind of live in this box where it was very simple. So they didn't have to think about, these crazy incentives that are external and internal. And now they do. And I think, the best example of this, which I think Matt and Brandon would totally agree with this, is kind of what Marathon's done with Slipstream and what I suspect other miners will do eventually, right? Where Slipstream is kind of this API that you can submit non-standard transactions to, which just means they're transactions that normally would have a ton of trouble landing in a Bitcoin block if you just send it to the mempool. But if you go directly to the miner and basically have an off-chain agreement based off of the miner's reputation and, submit something that is sufficiently compliant given Marathon's a publicly traded company, then you can submit something to the Bitcoin blockchain that otherwise wouldn't be accepted. Because they have, a high percentage of hash rate. What this actually does is drive order flow, that long marathon order flow, meaning transactions, to marathon that no one else sees. They earn additional revenue because of this, which is great. And I think, it's really impressive what they've done. But now this is all happening off chain. So the censorship resistance and kind of the ability to participate in mining generally becomes much higher. Like the threshold to be a Bitcoin miner becomes a lot higher in kind of this private order flow world. So I think, Matt and Brandon and everyone else in the community should be aware of this, but it's like, or they'd agree with this, is we're kind of drifting into this world, right? Where like even just the small bit of expressivity that was unlocked in Taproot and with ordinals and with BRC20s and now with, I think Casey's got a new one. Runes. Yeah, thank you. I think with all that expressivity basically getting unlocked, like now we're drifting into this world where we should think about how can we get these things on chain so that they maintain their censorship resistance. So that slipstream, isn't just this thing that's kind of legally and reputationally enforced through like normative law.
Right. And so I think, so there's a few things to disentangle here. So one of them is this idea, as you were talking about, with private order flow, or people refer to that as like private mempools. And so the concern is, okay, we want Bitcoin to be decentralized. Therefore, the everyday retail miner should be able to make a competitive block. Like in theory, he should be able to make a competitive block, and let's say if private mempools were to become really normalized and there was all these extra transactions that only the private mempools or private miners or private order flow knew about, could that harm Bitcoin's mining decentralization, because now the everyman can't just like plug in his Bitcoin mining rig and theoretically run a Bitcoin full node and sort of just get the transactions that are on the relay network of Bitcoin, because there's these extra transactions in the private mempools. I guess that's the concern, right? Do you have any view on that?
Yeah, no, I think there's always the light client, and like people can verify the chain without building on it. But I think
but this isn't about the light client though. This is about whether let's say the everyman, the average user who's not like a multi-million-dollar mining operation and pool, can he see all the transactions and create a roughly competitive Bitcoin block to mine with, even in like a Stratum V2 context. Do you understand what I'm getting at?
Totally. Yeah. So my instinct is like, yes, you probably could do this because the expressivity isn't that crazy yet. I think once you have, more expressivity, if some of these things work, which it looks like at least a few of them will, that are being built kind of in the venture startup world, or even just by, developers like Casey who are just doing it themselves. Some of these meta protocols are already working. Then I think, that revenue becomes more and more important, which with each halving. But right now you can build like a very non-standard block, right? Or just a very standardized block with like, no sophistication at all. And you're still earning like, at least over 3 Bitcoin. So, for now, I don't think that it is an issue. I do know like just mining is so expensive. To be competitive in this generally, you basically, if you're an at-home miner, you need really low cost energy. You need to route it through a pool probably to kind of have decent like revenue smoothing. Otherwise it's too variable and you actually lose money because energy is, such a volatile input. But I think longer term, this is very much what the Bitcoin mining world looks like. And then, the important discussion becomes some of these companies, that are either working on Stratum V2 directly or they forked it, or they're trying to bring over some learnings from other ecosystems around MEV and trying to basically say, how can we outsource block building to like a credible kind of auction mechanism? And then that gets relayed back to a miner who gets to mine it because they own that hash rate, and maybe they split some of the profits with the person building, and hopefully the building market is so competitive that it's pretty censorship resistant, but it's also so competitive that most of the fees get passed back onto the miner, so it's actually compatible with the network security. Whether like Bitcoin can do that in or out of protocol or like force it through, I think like one, that's such a huge technology shift, it'll just never happen explicitly. I think the only way this could happen is kind of implicitly through like a business or like through Stratum V2 or something like analogous to that gets forked. In Ethereum world, what this is called proposer builder separation, PBS, a lot of people have pushed back on this now because it looks like it actually has some serious issues if you kind of like force this on everyone else. I think, this goes back to proof of work. This goes back to, one of the best features of Bitcoin is that if, energy is the input along with, some hardware that has, you would know this better than I would, like maybe a 4-year life cycle on an ASIC. But if like energy is your main input, that's super globally distributed. It's typically tied to like a sovereign nation's kind of foreign policy, or like, really tied to the host nation. So it's going to be like a very distributed network already. And then if you think about like, okay, if the miners are all distributed, then they're probably going to have their own pools that are kind of aligned with the machines that they actually have. So then there's already going to be this kind of private order flow. Now, if you standardize this at the protocol level and try to enforce some sort of like building committee or something, which you couldn't even do on Bitcoin today, it would take enormous technical changes that I think the community would never be in favor of, which I think is a good thing. Let's say you did enforce this, you would actually break up this property. If you forced everyone to kind of like walk through this box of, let's make sure it stays cheap, you actually kind of ruin one of the best features of Bitcoin, which is that, there's a really high churn in the mining set, in the nodes that participate in the network, just because energy is so volatile and things change so quickly, and wars start, and now, a country that used to have 10% of hash rate now is 0 hash rate, which is a good thing because there's no there's no stable cartel in Bitcoin. Whether, this like small miner kind of exists today, I think they're already routing through a mining pool. I think what will happen is, the mining pools that are not good at extracting MEV are going to start losing those customers and start even losing some of the bigger ones who, have their own businesses or, have an exahash or something and point it to a mining pool because they're not unlocking that expressivity. And as that bottom line becomes more important, as Slipstream starts to earn even more money, right? Now you have to do it. I think that actually will break up some of the mining pools because, order flow and kind of co-location and all these kind of interesting concepts from, high frequency trading or Ethereum land, as they kind of come into Bitcoin, they interact with like the proof of work energy layer in a really interesting way.
Yeah. So interesting. Okay, a few things. I guess, let me rephrase it a little bit. I guess my point is not necessarily that, every guy needs to be able to be a home miner per se, but more that even if you are a relatively smaller miner, you should still be able to theoretically, hypothetically, can you run your Bitcoin full node? Can you mine with an SV2, Stratum V2 supporting pool that allows you to, maybe choose your own block template, choose your own transactions that go into that template, as opposed to, maybe the criticism today is, oh, look, there's, well, as I'm sure you're aware, there's this criticism now that there's a bunch of really proxy pools and they're really just proxying to ant pool. And so that's kind of the concern. The concern is that, okay, if you combine across ant pool plus, say, Foundry, that's already, now, granted, these are in different jurisdictions, so there's at least that. But the concern is, okay, Bitcoin mining is becoming very centralized into the, into some of these pools. Now, there's a few different reasons for that. People are saying because you need to offer a certain level of smoothness of the payout, and that's why people are talking about the different payout structures, and that's where people are getting into like, okay, is it FPPS or is it something more like a PPLNS style, which is putting more of the variability onto the individual hasher or miners, as opposed to the FPPS, which is sort of theoretically meant to be smoothing it out more. But I guess we're going all over a little bit. But I think if we were to talk about MEV and is it a problem, is it not a problem, I guess one other important point is to sort of talk about how much is there, right? Like as an example, as you mentioned with Marathon and Slipstream, I guess for now, it seems like there's not a lot of this private mempool flow for now. But is your thought then that over time that is going to grow? That's kind of the argument you're going to make, right?
Yeah, just to double click on your previous question, I think your proxy pool point is like definitely an interesting question. I think I kind of see arguments for both sides, so it's kind of tough to say. Just very quickly, I would say I think, these huge pools that are just renting from other proxy pools, right? I don't think that's like a super stable equilibrium when like Coinbase issuance goes down as like Bitcoin inflation goes down. and more of rewards are denominated in kind of like fee variant things. So like maybe it's, just weeks and weeks and weeks of vanilla transactions, but then you have that spiky week of MEV that you really need to win. Now you have to compete in an interesting way where, if Ant Pool or another mining pool isn't really unlocking this expressivity for everyone and then sending it back to them, there's not really a reason to use it. So I think it will kind of like break up the mining pool broadly. Great question though. In terms of kind of the size or like quantifying it, it's denominated in Bitcoin, which is volatile. So like the reserve that you're like measuring it and is pretty volatile. And then so it's kind of always interesting how you try and mark it in the data. But then there's also a question of like, ordinals themselves are really volatile, or runes. Everyone thought runes were gonna like take off really hard, and so far they've kind of like done all right. I think like it's kind of an unknown, but I will say like the attitude of building on Bitcoin is hugely different than where it was 2 years ago or even 18 months ago. And why that matters is if you add a decentralized exchange on chain, if you add something that needs an oracle, be it a lending market that, takes one version of Bitcoin and spits out another, be that a stable coin that's just fully backed by Bitcoin. If you had any of these things, there's huge potential for MEV that can also kind of go down to the networking layer and like affect chain stability, at least temporarily. Bitcoin's built in such a way that it'll be fine, but it could like cause like some reorgs or something else theoretically. So I think like the short long of it is just to say there's so many teams building and it's kind of unclear what's going to work and what's not. Some teams are trying to do like merge mine side chains, partnering with Marathon. Some teams might want to partner with a miner just so they can fit more call data in if they're trying to build a roll up via like BitVM. Other teams are just like, we don't have OP-cat. We don't know how to concatenate things on chain. So they're just very much going for like, maybe it's a mini script like multi-sig where it's very, very secure from like a how many people are on this multi-sig standpoint, how much would it take to conclude, but not like, the theoretical maximum of like trust minimized. So I think it remains to be seen, but what I will say is it will grow. And as Coinbase issuance goes down, it'll become something that matters more and more and more. And even if it's just a small bit of revenue difference, I think that matters a lot, especially in, a market like mining where like energy can undercut you so bad and it's all denominated by your margins. It's very commoditized.
Yeah, right. And so just to summarize some of that and paraphrase for listeners, we are currently in the 3.125 block subsidy era, right? And then so over time, what most people are anticipating, now even that is debated, but what most people are anticipating is that over time, the block subsidy component is going to come down and the transaction fees component is going to rise. Now, to what you were saying, it's that if people are going to start using, or they're going to try to do other things with Bitcoin, that's going to necessitate more transaction fees, and then that in turn may create more of a MEV, let's say bounty. There's more of it to be won. There's more of it that could be actualized by hypothetical mining pools in that future, depending on how things sort of play out. I think because I think there's a few question marks I would still raise, and maybe we can sort of take them one at a time. But two of them, I guess one is, will mining pools actually pay out those fees? As an example, right now, that one criticism that has been leveraged at some of the mining pools is this idea that, hey, you say you're going to kind of take this, let's say, out-of-band fee and pay it out as part of your block reward, but are you actually? Because there's some miners who are coming out now and saying, well, hang on, maybe we're not getting that, and actually it would be better to kind of have a more transparent, and this is where maybe they're arguing, oh, this is why maybe they're like Ocean as an example, because maybe it's more transparent in that way, and that the style of payout is different. So that's kind of the first point of, will they pay out the fees that they theoretically should, or that they say they are? And then secondly, I think people might also argue about how much expressivity comes to Bitcoin. So that's kind of another point about like, will people actually fork in OP-cat or maybe not, right? Or will they find another way, right? Like you were saying, will they find BitVM and so on? So maybe we sort of take them one at a time. I'm curious to get your thoughts on this idea that pool transparency, may not. Let me put it into a question. What if pools say they're going to pay out a certain amount, but they're not going to pay that out? And what does that change in the Bitcoin mining dynamic if, they do start to have private mempools, but they try to sort of withhold the benefits of that and not pay them out to the actual hashes?
Yeah, I think like the auditability is something you always like, as a miner. You like knowing where your revenue is coming from, why you're getting this revenue, why it's not lower, why it's not higher. I think in terms of will they like leave that, kind of relationship or look for another one or build their own, they have to be able to, right? And like if you have very high fixed costs and your like variability as a solo mining pool is very, very high, then, you could go bankrupt even if, let's say you had an amazing June, but you went bankrupt in May because in April, March, and February, you didn't mine a block, you're kind of in trouble. So I think there has to be like a next best alternative that you have to switch to kind of enforce this auditability. I think some people will leave and maybe that's when miners start getting into like more best practices. But whether they like completely, change their behavior, I think, that's like, maybe not. This is kind of a guess. I would say your understanding here is much, much deeper than mine, just on its face. But I think that's a super interesting question. Right now, there's not really, a next best alternative. What I will say is a bunch of teams are trying to get funding to build something that's more audible, that's more transparent, that's kind of more economically aligned in that it really shares all of the fees and just takes like a small difference and doesn't, say, hey, we're going to pay you 5 Bitcoin and then show up at the door with 4. So I do think that is something that happens. Whether, I still think, the bad practices will probably exist still in some form because you kind of get other things from participating in them. But,
okay. So then let's change over to the second point if you're kind of finished on that. Yeah. Like maybe we could talk a little bit about the expressivity point, because I think maybe there's a bit more of an argument around that. Right now, I guess let me just again set the table for listeners, maybe if people aren't as familiar with Bitcoin. The scripting language is arguably, there were certain functions that were taken out by Satoshi in 2010, right? This is around an early vulnerability. Yeah. Listeners can check out my recent episode with Rusty where we spoke about great script restoration, which is his idea of how to sort of try and safely turn on some of those opcodes that were lost or turned off. And as an example, could you safely turn on opcat and some of these other opcodes? And then what would that mean for us in Bitcoin, right? So that's kind of one angle. There's a bunch of people who are sort of saying, yeah, give us opcat. We want that so that we can build cat VM and some of these other ideas. Now, there'll be a contingent of people who are like, no, I don't want any of that. And just, keep it the way it is. And, if people go and build something on top of BitVM, okay, well, I can't stop that, but don't turn anything on. I guess there'll be some people who might have that view as well. So I'm curious, how are you looking at the ecosystem and understanding, okay, here are some of the different possibilities, here are some of the different pathways Bitcoin could go down?
Yeah, no, I think it's a great question. I think, like first off, just like all the different teams that are doing that are all kind of taking their own approach. And I think they have like very specific reasons when you talk to them for why they think, whether it be like merge mining, whether it be BitVM, whether it be a multi-sig for now, whether it be, OPCat in the future, I think they all have like pretty big arguments for them. But I think ultimately it's like how much Bitcoin is going to drive through that solution. So whether it's a DEX or a rollup or something else. And that kind of will determine whether it trickles down to like the MEV layer. Are you able to attract these users? Are they going to use your product? And then you can kind of look at the technology itself and be like, okay, what's the user experience like on a Bitcoin rollup? Well, it's really nice theoretically because it's trust minimized, right? But it's also very, very expensive because if you use Bitcoin to post your data to, it's going to be, as expensive as Ethereum mainnet, if not higher, which is obviously, not a great user experience. There's different ways to kind of like get, much, much cheaper DA. But, in terms of like best practices and stuff, I think that's a separate question to actually attracting the users and getting them on your chain. But yeah, I think for right now, it's kind of like an open question. whether CAC gets included. I think like Eric Annuity or like, next 12 months from Taproot Wizards, that is. I think our view has kind of been, like whether this is through BitVM, which we're big fans of, whether this is through OPCat, like a consensus change, whether it's through something else, it doesn't really matter. What matters is like all these people are trying something, and there's a big enough market where some of them are going to stick, some of them won't. And this should happen. We should be okay with getting censorship resistant financial Legos on top of Bitcoin. There's some other stuff that comes, along with this. With any technology, it's, a two-edged sword. But the actual unlock of letting people use their Bitcoin in, like a MakerDAO style thing where they can borrow against their Bitcoin, never have to sell it, and do other things with those dollars in the real world, and then get it back, after it's appreciated for 10 years or maybe over their full lifetime. That's a huge unlock. And that's a good thing for Bitcoin because it drives net new demand for Bitcoin. It kind of makes it more useful for people, which will help stabilize it long term so that it becomes more attractive externally for like things like payments in the real world. So we're huge fans of kind of this idea of expressivity on Bitcoin. I think it doesn't really matter which solution ultimately wins out, as long as it's, like sufficiently secure and has good decentralization under the hood, so it maintains kind of Bitcoin's core property of censorship resistance. But yeah, that's kind of the general take. I can get into like a specific one if you want, or I don't really know how you want to take it.
Back to the show in a moment. The lead sponsor of this show is Swan.com, and Swan has a mission to onboard millions of people into Bitcoin. I also work at Swan, helping on some educational content for the team. Now, the team have also put out a new version of the Swan Bitcoin application, which is available on your smartphone, whether it's Apple or Android. Now, this app has a really fast onboarding experience. It's now just a few minutes to go from zero to Bitcoin. So if you are standing there with your family or friends and you might have been having trouble trying to get them onboarded, well, try this now. Recommend Swan Bitcoin. And you can do this while you're standing next to them. They can click through, and most of them will be able to set up and do this in just a few minutes. Also, the team at Swan have rolled out a new promotion. There are 0 fees on your first $10,000 of Bitcoin buys. So this is a great way to go from zero to Bitcoin, and in a guided and managed way. So reminder, go to your App Store or Play Store and search Swan Bitcoin to get onboarded with Bitcoin today. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Coldcard Mark IV and the new Coldcard Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. This show also brought to you by mempool.space, the leading Bitcoin and blockchain visualizer. I use it all the time when I'm checking transaction fees and trying to understand what is the state of Bitcoin's mempool. You can search transactions, historical as well as unconfirmed ones, and also see a great way to visualize things across the Lightning Network, Liquid, mining, and so much more. Also, for those of you with an enterprise, they offer a mempool.space enterprise program. So for those of you as part of that enterprise program, you might want to get increased API limits, and you might want to have increased access to the team in terms of feature requests. You might want to have special branding in terms of how your custom instance of mempool.space looks. So to sign up for that, go to mempool.space/enterprise. And now, back to the show. Okay, so one other area that people are like now, I guess, okay, so there's a few things. So first of all, I think I'm a bit more cautious about what exactly, which of these things should be brought to Bitcoin. I'm kind of more of the don't break it style. And now I'm not an ossificationist personally, but I'm more like, I guess I'm more conservative in the sense of like, I'd be more cautious about what exactly gets brought in. Personally, I'd be open-minded to something like a low-risk covenant, something like a CTV or an L-enhance, something like that. But maybe if there's enough discussion and kind of debate and people are kind of okay with some more expressive things, whether that's great script restoration or maybe it's op-cat, I guess we'll put it that way. One other question that came to my mind, and I'm curious to get your thoughts on this also, is some of these MEV concepts relate to front running, and they relate to somebody knowing a price for something, but there's like an oracle for something else. At least that's my understanding of it. But one counter argument I've heard in the Bitcoin world is that Bitcoin has 10-minute block times, right? So there's just not really this kind of same front running opportunity like there is in other, in altcoins with dexes. What's your view on that? Does the 10-minute block time impact things there?
Yeah, no, I think the 10-minute block time certainly kind of affects the price that you would land a transaction at. The miner, let's say like you send it and then it doesn't confirm for 10 minutes. On average, I think Bitcoin has like an hour-long block once a week. Like it can be even longer than 10 minutes that you're waiting. Basically your transaction hasn't finalized. It's hasn't been fulfilled. So it's kind of like just an order. If you put like a limit order out there and then the market moves for you and then it moves against you really, really hard. But if it happened in like discrete 10-minute time windows, that's basically what would be happening. So I think it's like super fair. We've talked a lot about this internally and have a lot of familiarity with kind of the other ecosystems. And then I've spent like a lot of time in Bitcoin and stuff. And I think our kind of in-house view is DeFi applications or what you would call decentralized finance applications probably don't belong on Bitcoin's layer one. It has these 10-minute block times. It has kind of a variability in the block times. It has really expensive transactions relative to doing something off chain and just posting the data back. So where we've kind of fallen, our house view is because of like the issues you would have with something that's Oracle reliant when you in a world without finality, when you have like reorgs. I think it's very unlikely that like DeFi on Bitcoin L1 takes off. That said, I think if you kind of have this off-chain box that you prove things out of and people can go and lend and borrow and trade with their Bitcoin, I think that's hugely valuable. And to kind of have it run out of band of consensus, then it can kind of be really fast, even though Bitcoin's really slow. And just to hop back to your other point, I think, Rusty's done like a really good job evangelizing this, and I'm glad he got you on the CTV side to some degree. But I think, can we break Bitcoin is kind of this like looming question. I don't think any of these things do break Bitcoin in the worst case. I think if they're horrible solutions, you could add them to Bitcoin. The DOS vector is a separate question, and I think Rusty's addressed that really well, like the DDoS attack. But in terms of like the actual use case of a BitVM or an OPCat or something, I don't really think these break Bitcoin as long as you like resource constrain them within a block well, because if the off-chain logic that you build sucks, no one's going to use it. So it's not going to have like this incentive compatibility. And then it's like, okay, would someone just use this because they're like a malicious actor to attack the network? Well, then you just have to price it correctly so that it's in line with all the other, kind of resource constraints on Bitcoin. Bitcoin's so strong and so robust. I really think it would take a lot to truly mess with the chain.
Yeah, I think maybe I disagree a little bit. The way I see it is more like, would the benefits for Bitcoin self-custody outweigh some of the downsides, right? Because I think there are some downsides in terms of, would it enable more shitcoins? Does it enable more spam, right? Like for those of us who view inscriptions as spam and, BRC20 and runes as kind of creating shitcoins on top of Bitcoin, and we sort of see that as like that's a negative, right? Like, but the difference is I see it like I can't stop these things, right? I can't stop inscriptions and I can't stop people creating meta protocol, shitcoin layers on top of Bitcoin. But for me, what's important is that people can, self-custody and that they can use Bitcoin as money. Like, to me, it's this idea of money as technology, right? Like, just to me, that's what's really important. And so for me, I'm not as focused on like trying to enable the world in terms of like having decentralized exchanges and borrowing against your coins in some kind of protocol thing. For me, I'm kind of more comfortable with that. Just, like keep Bitcoin as the money. And if there's a company who wants to offer these services, I'm okay with that. Like, I guess that maybe also comes to this view of like, what exactly do you view Bitcoin as being, right? So for me, I view Bitcoin as challenging central banks mainly. I'm not in principle opposed to the existence of retail banking. It's that I don't want retail banking with fractional reserve and with a expanding fiat currency and government control for, government support or subsidization. These are the things that I'm more opposed to. So I guess that comes down to that view of, do you view Bitcoin as, just, and maybe that's kind of where there's this kind of difference in opinions where some people are like, no, I just want this thing to be the money and don't mess with it. And, I fully encourage people hodling, and other people who are kind of like, no, I want to be able to do things with their Bitcoin, and I want to be able to borrow against it, and I want to have, these different collateral markets and things like that. So maybe that's the difference in the mindsets or the viewpoints.
Yeah, no, I think you like nailed it. I think that's like a really concise way of putting it. My view and kind of the way I've seen these things is I understand like the fears that comes with adding expressivity. And I think, the developers who have pushed back on this are much smarter than me and can think about attack vectors that I just have never, come near thinking about. But I think, when you talk about Bitcoin as money, right? Like, what do you want to do with money? You want to borrow, you want to lend in it. You want to, maybe you deposit some to take a mortgage out or to like take some money out to like purchase a house, right? All of that right now is done through centralized entities. Maybe some of them do like pretty good custody practices, but some of them explode. Like we saw this last cycle. Like BlockFi was a really reputable business, and I think they did a pretty good job. And then they just had some. I actually can't even remember. It's been so many years what specifically happened there, but
so I think that was a case of the GPTC premium.
Yeah.
So I think what happened, so my understanding there is GPTC had this premium, and there were people who wanted to borrow to take advantage of that. And so Three Arrows Capital was one of them, and and there was kind of, I think there was a lot of people borrowing, and BlockFi were openly rehypothecating, and that was another area of criticism. A lot of us were critical of them for rehypothecating, and I think it came to bite them in the ass in the end. And so what we saw was kind of this regulated front end, but actually in the back end, there's kind of all this like crazy gambling going on. And similar with Celsius, FTX was a scam show. So I think that was the criticism. And so in a world where, there's different ways you could view this. You could say, look, it's a good thing that these companies went bankrupt because they were doing irresponsible things. And it's good that there's no bailouts in Bitcoin, and that for many of us as kind of hodlers is like, yeah, not your keys, not your coins. Please be wary out there.
Yeah, no, I think that's super fair. But I think like the money itself has to have applications and stuff that goes along with it to make it really useful. I think, I want it to compete with the Federal Reserve too, but the Federal Reserve has, JP Morgan, it has Morgan Stanley, it has Chase Banking, it has Venmo, it has all these applications that make kind of the system work. And I don't think we can put all those on chain, nor do I think we should try. But a great starting point is just kind of like these verifiable, trustless Lego bricks where, if you want to withdraw your money, it's there. You can see it. You can audit it. You can prove that it's there. Because if people don't have this, what they end up doing is they go to the BlockFis, they go to the Celsiuses. Even if, you and I can sit here and say you should hodl it and it's a mistake, and I do agree with that. Not everyone's going to do that. In terms of the degeneracy that comes with it, in terms of the meme coin trading or just the shitcoin trading that comes with it, I understand kind of both sides here of like, it's a free open market. If people want to be very, very speculative, if they want to, gamble on the Mavericks last night, or if they want to buy the latest meme coin, they can do that with their money. It's financial sovereignty. At the same time, I understand, hey, this is spam. And it's kind of annoying that it's clogging the chain for like, maybe someone's Venmoing their grandparent who lives, or, sending a Bitcoin transaction to their grandparent who lives in another country. And that, from like a moral or like ethical kind of standpoint seems a lot more valuable. I think those are both kind of true. And I think that's why you kind of design the system to allow people to do both. You scale the system to kind of all use cases. And that's how we really compete with the Federal Reserve, where we can kind of offer all things to all people. And if people want to be done with their money, play stupid games, win stupid prizes, that's okay. But at the same time, like getting these things on chain and verifiable is important to actually competing with the Federal Reserve. It's important to kind of getting stablecoins on chain and have them be on Bitcoin versus some other network that's not as secure. So that's, kind of the pushback I would have is that, the mini money Legos kind of incentivize usage of Bitcoin, which is good for Bitcoin as money. It creates lower volatility in the actual asset price, which makes it more attractive to use externally in other economies. So if we can grow like the Bitcoin on-chain economy, the price is going to be a lot better. So then people are going to go use it in the real world. It's going to be a better currency for everyone.
Yeah, so I think we can agree that more people using Bitcoin is a good thing. I think the question is, what's the way that is achieved, right? Is it achieved through using some kind of on-chain protocol or some kind of change at the protocol level? Or is it more just acceptance of certain corporates, businesses, and, not ideal, but custodial providers? I guess that's sort of one of the distinctions. I think the other distinction, maybe the other kind of thing is, people might say, I'd rather you go do the shitcoin things elsewhere, right? Like that's kind of, historically been the mindset of a lot of Bitcoiners of like, I'd rather you go do those shitcoin things elsewhere and like, let me keep my money pristine kind of thing. I think one other area that people are going to maybe want to hear discussed is this idea of how decentralized are some of these things, these other protocols. Like this criticism which people have is more like, see, it's actually just a multi-sig, right? Like you're talking about people are talking about all these new protocols and they're giving us all this flowery language, but actually it devolves back to a multi-sig, and that's really what it is. I'm curious what your view is on that, and will that evolve over time?
Yeah, no, this is like such a good question. I think has evolved over time. It's certainly improved over time. I think when the first kind of roll-ups on Bitcoin talks were happening, I think, Trey wrote the first piece on it, and then John Light wrote like validity roll-ups on Bitcoin in like mid 2022. I think with a grant from some
from
Bitcoin.
HRF, I believe. Yeah.
Yeah. So like, when this kind of discussion was going on, like zero knowledge proofs were not that great. Now, we're about a year away from us having like real-time proving, like really fast proving, which is like one of the things you would want for a really good like Bitcoin product. So I think, all these things are certainly improving. In terms of the immutability of like specific applications, it really varies. I think, some things are reliant on oracles because they have to trigger liquidations if it's a lending marketplace. And, the oracle problem probably never goes away. You need to be able to bring this logic of what's happening in the real world to bring it on chain with a slight delay somehow or another. You can make it really robust and have like 50 providers or something, but you're still, kind of having that assumption, right? But, something like Uniswap, right? Like where it's completely on chain, the contract's immutable. Uniswap v2 got forked by SushiSwap, and it was like an exact copy, totally immutable, and there was nothing they could do about it, right? That allows kind of like instant swapping. So if you had like a stable coin like USDC and you had Bitcoin and let's say you were like fleeing like a hostile regime with like crazy inflation, right? That would have a lot of value, and you wouldn't have to go to a custodian who, has to KYC you, this is the same thing in our view as kind of like tokenization, which, a lot of the big banks are pushing for now, because with tokenization, you can kind of amplify a good regime's kind of capital markets into the world without figuring out how to deal with KYC, AML, and custodying, without founding a whole new bank and a whole new regime and playing that political game with a whole new central bank. Instead, you can just amplify from one jurisdiction to another one with a neutral network. I think doing that on Bitcoin is awesome. Like if I could own, a tokenized Apple stock on Bitcoin and also have it be pretty much non-custodial besides like the settlement of the Apple stock on the back end, and also, use my Bitcoin to take out a loan to pay for college or something, that'd be incredible. So, I think there's like tons of use cases for these things, and I think they have varying degrees, but I think generally they're improving a lot. And, the really bad ones, and this is just kind of, how free market oriented are you? The really bad ones exist and explode after a couple years. They take people with them and financially, and that's horrible, but it's just kind of the reality of the situation. And then it becomes like a very hard philosophical question of like, how into free markets are you? Should people be able to do anything they want with their money, or should we have some sort of regulation in Bitcoin that stops people from, gambling on the latest meme coin?
Yeah, I mean, look, obviously I don't believe in stopping people from doing what they want to do with their own money. I think the concern is more just about, okay, there's a few, I guess, probably the two main ones. So the main one, which we've been kind of talking a bit about, is like, does it create a centralizing MEV or some kind of centralization at the mining level? And that's the opposite of what we want. We want decentralized Bitcoin mining, right? That's one thing. The other thing might just be, does it kind of invite the eye of Sauron, right? For the same reason that Satoshi didn't want to, have WikiLeaks donations or whatever back in 2010 or whatever, like, does creating, more opportunities for shitcoining and, spamming on Bitcoin, does that invite the bad form of government, control, right? Now, I would say that, we're recording this 27th of May, 2024, and it seems to have just in the last week or so, it seems to have flipped, right? As I'm sure you're very well aware, but just for listeners, up until recently, it was kind of seen almost like, oh, wow, Elizabeth Warren is coming for Bitcoin and she hates it. She's got the anti-crypto army and all this stuff. And now all of a sudden, it seems like Trump has gone full pro-crypto. And, the SAB 121 was, rejected, and senior Democrats were going against Elizabeth Warren. So it seems like the environment has shifted as well from a regulatory perspective. So, while I obviously don't want to control what other people do with their money, I personally stay Bitcoin only, but people do whatever they want, and I believe Bitcoin will just kind of win on its own merits because it is just a better money. So I guess that's kind of a few of my reactions, but I guess to bring it back to our question, I guess that, like I said, the two concerns would probably be, does it centralize the mining in a bad way for Bitcoin? That could be easily censored. Or two, does it invite kind of the eye of Sauron, the governmental regulatory ban hammer?
Yeah, I think on the first point, I think just proof of work is so nice that it's so globally distributed. And then people tend to align with exchanges that are kind of local to the nation they're hosted in, or they're going to have a roll-up that's they're just going to be the roll-up for Bybit that's Bitcoin aligned. There's going to be the roll-up for Binance that's Bitcoin aligned, which actually kind of breaks up the mining pool a little bit as MEV again becomes something that matters more and issuance goes down over the next couple decades. I think we actually kind of see the centralization element that's largely been driven by the revenue smoothing go away, because the revenue smoothing itself will kind of go away. So I think, in that regard, it's actually really nice. Unless you have some sort of client push where everyone has to run the same client. I think, that won't happen in Bitcoin. That's kind of happened in Ethereum, but that's a separate discussion. In terms of kind of your second point, which, one more time, sorry.
Like the regulatory ban hammer, right? Like if the government comes because of, there's shitcoin scammers and spammers and whatever.
I love the way you phrase it with the answer. I think this is just something that all of crypto grapples with. You suffer from success, and this is going to happen one way or another. And this idea of separating state and money in one way or another, has to come to grips with it. Even if it's, pre-roll up of Bitcoin, tokenization on Bitcoin with Elizabeth Warren, or if it's later down the line when when we have people saying, oh, you can only build compliant blocks, OFAC compliant blocks someday, if we get into that world, which I don't think will happen on Bitcoin, just because of the way Bitcoin's built. I think this could happen. China banned Bitcoin mining, and Bitcoin didn't go offline. Bitcoin was fine. A huge part of the network was partitioned, and the network stayed live. This is a superpower of Bitcoin that no other significant network has. And I think it's actually something that'll, as people start to use Bitcoin more or interact with it more, or as the eye of Sauron turns into Bitcoin, we'll be like, wow, this thing is World War III grade censorship resistant. And that's what's so amazing about it. No one can mess with this. No one can mess with these applications. No one can mess with my money that's in these applications. I am sovereign. I think, so I think I invite the eye of Sauron, not personally, but maybe edit that out. But I think for Bitcoin, I think it's less of an issue, and it's something we'll have to grapple with eventually. So might as well grapple with it now and really test our systems and be sure that no one can mess with the chain.
Yeah, see, because I can imagine there'll be a bunch of people who are saying, well, no, let's have more runway. Like, let's have some more runway before you can. Let's there's safety in numbers. Let's get more people onboarded into Bitcoin, and so it becomes harder to stop. So I guess that would be, what do you think about that? The idea of growing the base of Bitcoin holders and users more before sort of trying to fight a very powerful opponent.
I don't want to misquote it, but I think like over 30% of Americans in the U.S. now own, and I think the reason that's relevant is just the U.S. historically has been the biggest financial kind of controller around the world, the U.S. government. And then I think internationally it's even more popular. Like you go on any trip for a Bitcoin conference or something, and you go into like a local cafe or something, they accept like USDT on Tron, they accept Bitcoin, like there's Bitcoin ATMs all over the world. So I think, the adoption is really, really great. I think that's, at this point, it is such a network effect and there's so many people campaigning for it that Bitcoin adoption is going to be phenomenal. I think in terms of the numbers games, we're already there. I don't think, I think China is one of the most oppressive regimes on the planet. And they banned it, and here we are, 4 years later, and totally fine. So it's not something I'm particularly worried about. But yeah, I think generally, you're right. More adoption is always better. More hodlers.
Great. Okay, so all right. So I mean, we've covered a lot of things. We've spoken a bit about MEV, the kind of the nature of shitcoin and scams, and what genuine building and constructive building on Bitcoin might look like. So let's, I guess, finish up. Do you have any thought on, I guess, closing up with, is MEV good or bad for Bitcoin? I guess that's the question.
I think it's kind of the cliche good of like expressivity is a good thing. Getting expressivity that's censorship resistant, kind of this, it goes back to, I think, the cypherpunk movement, that its code is great because it's something that can't really be destroyed. It's freedom of speech that has a low cost to replicate and can just like be transmuted all over the globe. I think Bitcoin is just an amazing platform to kind of host other applications, not generally on itself, but to secure them. And I think that drives MEV. So in that respect, Bitcoin will now suffer from success. It'll suffer from having MEV, but that is just a hallmark that it has greater utility, which is, good for every individual on the planet, I think. So I would say yes.
Yeah, interesting framing. So yeah, let's leave it at that. Listeners, check out I'll put Walt's link in the show notes, and let's see what people think. Obviously, you and I might have some disagreements about what Bitcoin should do, the path it should take, but let's see what people think. So thanks for joining me, Walt.
Thanks so much for having me on.
I hope you enjoyed the show. If you did, make sure to give it a thumbs up and share it out there with your family and friends. Check out my website at stephanlivera.com, and I will see you in the Citadels.